Hello guys, my name is Francis. Today I'm going to take you through the tax deduction card. If you haven't made one, please feel free to make one with me. So I have an Excel sheet here. I'll show you how I formulated it to calculate your payee. This is what is called the P9 form or the tax deduction card. You use it to file your individual return if you are employed during the year 2020. Like if you are employed from 1st of January 2020 to 31st of January 2020. So it's a tax deduction card for the year 2020, and you can all and as you all know, we are required to file our individual return by the end of June 30th, saa sita usiku. So I have just added dummy names here. As you can see, the employer's name I've given it ABC Limited, the main name Peter and other names Cooper. I came here and give it an employer pin. An employer pin starts with a P, of course, and ends with an alphabet. You can see in between there the numbers 1, 2, 3, 4, 5, 6. They do not actually correspond to a certain employer. Just get them a dummy number. I did the same with the employee number and the employee's PIN. As you can see, the employee's PIN is starts with an A, ends with an alphabet. I added 1, 2, 3, 4, 5, 6. So you will use the employer's PIN and the employee's PIN after logging into your iTAX, but I'll show you that in another video. So when you come down here, these are actually the months that you worked. So as you can see here, we have January, February, March, April, May, June, July, August, September, October, November, and December. So in January, say you earned 40,000, and you will note that the sheet is formulated, so it calculates automatically the payee down there. As you can see, if it's 40,000, you're required to pay a payee tax of 4,059 shillings. So if I change this to 50,000, you will realize that my sheet automatically changes. Understand? So here you will just enter the amount that you are paid during that month. So if it's January, if you did not work during that month, leave it blank, and you will see that the sheet actually gives you 0 pay, so no tax liability. So the benefits, non-cash benefits. Non-cash benefits is money that you received other than your basic pay, like you are paid overtime, you are paid incentives, you took goods worth more than 3,600 shillings home as non-cash benefits. You're supposed to record them here. So if you add the amount there, it adds to the figure that you took home as your total gross pay. No, the figure that is your gross pay. Understand? So the value of quotas here is the house. If you are, this is only filled if you are housed by the employer. So these are benefits given, and you pay taxes for benefits given by the employer. So if the employer has housed you, you are supposed to give us the market value for that house here, the value of quotas. So you add like say the house is a single room that goes for maybe 4,000 shillings, so it adds to your gross pay. Understand? So gross pay is just a summation of B18, C18 and D18, which is basic pay, non-cash benefits, and the value of quotas. If you are not given any of this, just put a 0. Okay, so we come to the defined contribution retirement scheme. This is where we add the figure of the defined contribution retirement scheme. Most Kenyans call it N.S.S.F. Let me just call it N.S.S.F to ease in the to make it more simpler for you guys. So we normally calculate it this way. We either take 30% of your basic pay, which is 15,000. That is if you see here, it is the sheet is formulated as I told you, so it's actually 30% of that, or the actual contribution, which is 1080. Why? Because you are supposed to contribute 1080. The employer is supposed to contribute 1080, and that is what they deduct. The 1080 is what they deduct from your salary, and the employer adds 1080 and remits to the N.S.S.F 2160. You understand? And that is in the new N.S.S.F rate. So if you're using the new N.S.S.F rate, that is it. This figure is curved, and it has a limit of 20,000. So if you contributed more than 20,000 to your social security, you can only claim up to 20,000. You understand? So this one here is now what we call the mortgage. If you're given any mortgage, the interest you can put there. But this one here is now the figure from defined contribution retirement scheme. So I told you we are only picking the lowest of the three, either 30% of your basic pay, or the actual contribution that you made, or a fixed amount of fixed top amount of 20,000. So whichever is lesser we take. So in our case, the actual contribution was less because it was 1080, and you can see the sheet is formulated there. It gave us 1080. So the chargeable pay, what is the chargeable pay? The chargeable pay is what we call the taxable amount. Now, how much are we supposed to tax now? So the taxable pay comes after the gross pay is deducted from the retirement contribution is deducted from the gross pay. So it is formulated there, and you can see it is cell E18 less cell J18. So as you can see, this is just a difference of that and that to give us that. Now this is what we can tax. This is what is chargeable pay. It is taxable amount. Now the tax paid on this one. Now you can see my sheet is formulated. Now in 2020, the graduated tax scales were changed. It was 30%, 25%, and 10% only. So you can see that my sheet there has formulated to calculate that, and that was the taxable charge, tax charged, I mean. And the tax charge does not mean that is the tax you're supposed to require. You are required to remit. No, it's because if you are a resident, you are entitled to a personal relief, a monthly personal relief of 2,400, which totals to an annual relief of 28,800, as you can see there. Now that is what you get after deducting that. Let us not forget that you're also entitled to an insurance relief. That is only if you are contributing to a life assurance. So if you have a life assurance, you are allowed to deduct it there. And you can see we have the pay that you're supposed to pay here calculated automatically